Bitcoin hit an all-time high above $126,000 on October 6, 2025. Then it pulled back hard. If you've been in crypto for any length of time, you'll recognize the pattern. Volatility has always been part of the deal. Even knowing that, pullbacks can still feel uncomfortable, especially when headlines love turning every dip into a crisis. But zoom out and the bigger picture becomes clear. 2026 is shaping up to be one of the most important years in Bitcoin history because this isn't really about the day-to-day price. Even though the long-term trend has been upward, it's about what's changed around Bitcoin. Years of building, testing, regulating, and refining are starting to line up at the same time. And that's turning Bitcoin from an idea about the future of money into something governments, banks, and everyday investors can no longer ignore. And here's why. First, access has improved. Not long ago, a lot of people avoided Bitcoin because it felt confusing. And in some countries, access was limited or unclear. That's no longer the case. Major exchanges now operate in more markets. Account setup is faster, interfaces are simpler, and most platforms now have education built in. But exchanges are only part of the story. Bitcoin ETFs have opened up a completely new way to get started. An ETF is a regulated investment product that trades on the stock market. Most ETFs hold a mix of assets. For example, an S&P 500 ETF holds shares in hundreds of large US companies, giving investors broad exposure in one product. A Bitcoin ETF is different in what it holds, but familiar in how you buy it. Because it trades on the stock market, everyday investors can get Bitcoin exposure through the same brokerage accounts they already use. And already, these Bitcoin ETFs have pulled in over $50 billion. BlackRock's Bitcoin ETF even became the fastest in history to reach $10 billion in assets. This has only been possible because of years of regulatory progress that's finally coming together. Now, when some people hear regulation, they assume it's negative. But in reality, it's about clear rules. Who's holding customer assets? What standards platforms have to meet? And who's accountable if something goes wrong. In other words, it's about protecting users. And in 2026, those protections are getting more defined. In the US, the Genius Act became law in 2025, setting federal standards for stablecoins. In Europe, MiCA introduced an EU-wide framework for crypto businesses, bringing all member states under unified licensing and consumer protection standards. And globally, lawmakers are continuing to clarify how digital assets fit within the financial system. So, the conversation has moved from, is this allowed, to, here's how it works. And that clarity changes perception. Bitcoin starts getting treated less like a trade and more like something that belongs in long-term portfolios. More financial advisors are actively adding it to client portfolios. And a recent Bitwise report shows 99% plan to maintain or increase that exposure in 2026. We can see it at the government level too. In March 2025, the US established a strategic Bitcoin reserve, designating it as a long-term reserve asset. El Salvador made Bitcoin legal tender in 2021 and continues to hold it as part of its national reserves. And Bhutan has been adding Bitcoin as part of its state's holdings to support economic growth. At the same time, global ownership has grown into hundreds of millions. And in many regions, this is where Bitcoin really matters. It isn't just about investing. It's used for remittances, savings, and moving money across borders where traditional banking can be expensive, slow, or restrictive. And that usage is accelerating because the conditions people said had to exist before Bitcoin could be taken seriously are now in place. Clearer rules, institutional access, government recognition, global adoption, and a steady stream of new participants taking their first steps.